Good evening, guys, and good morning, good afternoon, and good evening for all the virtual guys as per your batch timings. Today, we are going to start the most important chapter of CA Final Direct Taxes, Profits and Gains of Business and Profession. Now, this chapter is very important because you will be having a direct 16 marks question on this, plus you will be having lots of cases and case law based questions. So, please concentrate on this chapter. So, when you start your study, you start with this chapter. So please open page number 74. On page number 74 and 8-9 page later, we have all snapshots. So whatever we are going to study, we are going to summarize all the provisions in these snapshots. Now if you see on page number 74, all residual sections are given which are not comparable. But afterwards, we will be having all comparative charts like depreciation. On page number 75 we have depreciation chart, depreciation comparison. Then we have all the explanations to various sections. So again that is relating to depreciation. So likewise we are going to summarize entire PGBP in around 7-8 pages. So we'll start with profits and gains of business and profession, which is given on page number 85. Please open the page 85. Okay. Now I'll start reading page number 85. Section 213, business. Business includes any trade, commerce or manufacture or any adventure or concern in the nature of trade, commerce or manufacture. Profession. Profession includes vocation. It implies professed attainments in special knowledge as distinguished from mere skill. Special knowledge which is to be acquired only after patient study and application. Now if you study this head of income, now mind you, please don't write PGBP in exam. This is only for our understanding. In the exam, if this question is asked anything relating to business income, you either write on business income or professional income. Now, this head consists of income from business and profession. Now, if you see the definition of business, what does it include? It includes trade, commerce, manufacture, trade, commerce and manufacture. Okay. Now what do you mean by trade? Let's discuss each of these terms in detail. Buying and selling of goods. Very good. What do you mean by commerce? Now we are all commerce graduates, or we are going to, or some of you may become, or they are going to become commerce graduates. So tell me, what do you mean by commerce? We know trade, we know business, but we don't know commerce. We are studying commerce for almost 5 years. What is commerce? It is simple. It is trade on large level. So if you can write for trade, what is trade? Sale, purchase. What is commerce? Trade on large level. Okay. Now, next definition is of manufacture. Manufacture with its grammatical variation means a change in non-living physical object or article or thing, resulting in transformation of the object or article or thing into a new and distinct object or article or thing having a distinct name, character and use, or bringing into existence of a new and distinct object or article or thing with a different chemical composition or integral structure. So you must have done your definition of manufacture in exercise. So a similar definition is there, that you need for manufacture, what you need, there should be change, conversion from one form to another, but very, very important, see the words, change in non-living physical object. So it cannot be change in living object, it should be non-living physical object. So change in non-living physical object. And what do you mean by profession? Okay, so it can be either service or skill based activity. So in the space provided on page number 85, you copy this. So what does business income include? It includes income from trade, commerce, manufacture, profession, vocation, all of this. Now a very important question, whether profit motive is required or not for business income. Is it given that the activity should be carried out with a profit motive? No. So what it implies, if a section 25 company or a charitable trust runs any business without any profit motive, but it earns some profit, then still that income will be taxable under this head. So write down note. You can write the note after the chart is done. Write down. Note, profit motive is not essential. Profit motive is not essential. Now in the definition we have one more thing, adventure in the nature of trade. Now what is the difference between trade and adventure in the nature of trade? Trade means what? Buying and selling. If it is on a recurrent basis, then it is trade, that I am doing it daily. Adventure in nature of trade or commerce means a single activity. So you cannot say that since I am doing this only for one time, it won't be taxed. Even if you do buying and selling for only one time, still it will be taxable as business income. So write down, adventure in the nature of trade, commerce or manufacture. Trade, commerce or manufacture. Trade, commerce or manufacture. It is a one-time activity. It is a one-time activity which cannot be entirely said to be trade. But still, the income from such activity, can be called as business income. Now a general question, can I trade with myself? No. I cannot trade with myself if a proprietorship concern sold goods to the proprietor. What will be the accounting treatment? I am a proprietor of any proprietary concern who is into sale and purchase. I have purchased or I got the goods. It will be called as drawings or withdrawals. So if I am trading with myself, business income won't arise, it will be drawings. Correct. Can I pay interest to myself? I cannot pay. So sole proprietor cannot receive interest from the concern. But can a partner receive from the partnership firm? Yes, because they are two different persons. So this adventure in the nature of trade, commerce or manufacture we have already discussed. You can go through the different points on the basis of different judicial pronouncements. Now let's check up the charging section, section 28, income chargeable to tax. Very important section. Income arising to any person by way of profits and gains from business, profession or vocation. This we have already discussed, the three terms. Income derived by any trade, professional or similar association from specific activities rendered by them to their members. So into bracket write down, refer booklet 2, chapter on principle of mutuality. Refer booklet 2, chapter on mutuality. Now a very important question. If I receive some perquisites from my employer, what do you mean by perquisites? Some benefits in kind. Cash or kind, but normally they are in kind, like rent-free accommodation. Then we have motor car given for use, etc. So if I receive from my employer, under what head it will be taxed in my hands? Under which? Income from salary. But if there is no employer-employee relationship, then it will be either taxed as business income or income from other sources. That drives us to point number C. The value of any benefit or perquisite, whether convertible into money or not, arising from business or exercise of profession. So if I receive any benefit or perquisite from my clients, that will be taxed as my business income. Next, we have all done this many times. Any interest, salary, bonus, commission, remuneration, by whatever name called, due to and received by a partner of firm from such firm. Now interest and salary from partners will be taxed as business income. Yes. How much interest is allowed at what rate? Partnership firm? 12%. Now if partnership firm pays me 15% interest, how much interest will be allowed to the partnership firm? Only up to 12%. The balance 3% will be disallowed. Correct. What about taxability in the hands of partners? The partner has received 15%. How much will be taxable? 15% or 12%? In the hands of partner, how much? Okay. Now, in the hands of partner, whatever amount is allowed as deduction to the firm, only that much will be taxable. Again, for remuneration also we have limits, that up to first 3 lakhs, 90% of the book profits, and balance whatever amount, 60%. Whatever is allowed as deduction in the hands of firm will be taxable in the hands of partners. So write down there into bracket. Amount taxable will be amount allowed as deduction in the hands of partnership firm. Okay. Now that deep E point, we'll just keep it pending because we have a specific section 35 AD, where we have to refer that. The next F, person compensation or other payment to person managing the whole or substantially the whole of the affairs of the company or company at termination of his management or office of modification of any terms of any of the terms and conditions. So if who is a person who wholly or substantially manages the whole affair of the company? A whole-time director. So whenever he is terminated and any payment is being made, you must have studied this in your Companies Act, that some termination payment is made to whole-time director or managing director. That payment will be taxed as business income in the hands of that person, that director. Next, person holding an agency in India at or in connection with termination of agency or modification of any of the terms and conditions. Who is this? Again, refer your Companies Act 1956 wala sole selling agent. So whatever compensation is received by a sole selling agent at the time of termination, again it will be taxed as business income. And what about the remuneration or whatever payment he receives during the course of his activity? See, a sole selling agent is being appointed by the company for a specific area, and the company is making him payment. So that payment will be taxed under what head? Business income, because that is his business. So it will fall under that category A, because it is. What about at the time of termination? It is okay. See, it is an income, or it is a receipt which is received for in exchange of source of income. So it is a capital receipt. We have learned that capital receipts are not taxable. But when a capital receipt is specifically made taxable, it shall be taxed. So what can we conclude in that F point? Termination payments made to whole-time director or sole selling agent will be taxable under business income. And third is person for with vesting of management of any property or business in the government or in any corporation owned or controlled by government under any law for the time being in force. So you can just write a note after that table. Termination payment made to whole-time director or agent will be taxed as business income. Will be taxed as business income. Then check up that G point. All the export incentives which we receive will be taxed as business income. Like important of this is duty drawback. Have you studied in customs duty drawback? So that benefit will be taxed as business income. And other benefits, the duty entitlement passbook scheme, duty remission scheme, all those are there in your syllabus in IDT, in that foreign trade policy. So again, these are very important. So whatever benefits are received as per foreign trade policy will be taxed as business income. Clear? Yes. Now next is very, very important, non-compete income. What is this non-compete income? Compete means what? The word compete is derived from which noun? Competition. Okay. Non-competition means what? I'll pay you something, you don't enter into competition with me. Some person is there, say in Pune, he is managing some business. Along with A is managing business with B. B says that I want to retire, you pay me something, I want to just sit at home. So they enter into an agreement which that A says that okay, I'll pay you this X amount, but you won't be able to carry out business for in this specific area or for a specified time. See, again, this payment is in the nature of exchange of money for source of income. So it is a capital receipt which is specifically made taxable under section 28. So it will be taxed. So let's check up what is non-compete income. Any sum whether received or receivable in cash or kind under an agreement for not carrying out any activity in relation to any business. So non-compete income in relation to business will be taxable. Now let's say I am a partner in a CA firm having 3 partners, A, B and C. I am Mr. C. I want to retire from the firm and firm pays me 10 lakh rupees so that I should not start up my practice. Will that be taxable in my hands? It will be taxable? Yes or no? Okay, I'll read it again. A point. For not carrying out any activity in relation to any business. Now, CAs, do they carry out business or profession? Profession. So, you have to read each and every word properly. So, non-compete income in relation to profession won't be taxed. We'll write a snapshot afterwards. I'll read now B point. Not to share any know-how, patent, copyright trademark, license, franchise, or any other business or commercial right of similar nature, or information or technique likely to assist in manufacture or processing of goods or for provision for services. Now see this in point number B. For not sharing any intangible asset, it is in relation to manufacture or processing of goods, which means business, or provision for services, which means profession. In point number 2B, they have covered business and profession, but in point number A, they have just covered business. So we'll write a snapshot. So write down there itself below you can write down non-compete income, particulars, business, and what will be the last column? Yes, profession. Good. First, income not to carry out any activity. If it is income not to carry out any activity, for business, if I am receiving it, will it be taxed? Yes, correct. Taxable. And what about profession? Income not to carry out any activity. What is activity in this case? In profession? Carrying out profession. So it is not taxable. This is that A point. So you circle this or make some star marks to make it important. But just remember, we are doing this star marks, circling, whatever, highlighting only for our class purpose. You should not do this in exam because that may amount to copy and you will be debarred. Income not to share intangible assets. Now this fall amongst that B point. Income not to share intangible assets. For business, will it be taxed? Yes. And for profession? Yes, correct. Activity for profession not taxable. So just remember, this is a classic example for you. If CA receives any fee for not carrying out the activity, then it is not taxable. Okay. However, the above subclause A shall not apply to any sum which is received or receivable in cash or kind on account of transfer of right to manufacture, produce or process any article or thing, or right to carry on any business which is chargeable under the head capital gains. So here it is specifically given that if it falls under capital gains, you cannot take the benefit given here. So if it is taxed under capital gains, tax it there. Don't get it here. And any sum received as compensation from Multilateral Fund of Montreal Protocol on substances that deplete the ozone layer under the United Nations Environment Program in accordance with the terms of agreement entered into with the Government of India. Now, this from Multilateral Fund, if I receive some amount that you don't carry out this activity, this business, because it is harming environment, then it won't be taxed. We'll write down something for this point number B. Write down. Make a star mark and again a star mark below the table so that we are referring. Make a star mark for that multilateral fund and again a star mark below and write. If the businessman receives any money for not carrying out certain business, considering the environmental factors from the multilateral fund, then it will not be taxable under section 28. under section 28. Under section 28. Okay, now again a very important area which have there were few amendments last year. Key man insurance policy. Do you know who is a key man? Key man. Okay, so key man word is not defined. So normally top level employees are called as key men. So key man insurance policy, something is given. Let's check up what is given. Proceeds of key man insurance policy. Any sum received under a key man insurance policy, including the sum allocated by way of bonus on such policy, will be taxable as income from business. Now tell me why need to tax proceeds from key man insurance policy as business income? Think on this. Okay. Now there is one section 37(1) under which key man insurance policy will be allowed as deduction. So let's say the payment package of CEO is fixed at 1 crore rupees. Now if this amount is directly given in cash after TDS, the entire amount will be taxed in the hands of CEO. So what tax planning companies or employers started doing? Out of this 1 crore, they started paying 20 lakh rupees insurance premium, key man insurance policy premium of the key man. Now see from the point of view of employer, how much deduction is getting? 20 lakhs plus salary paid 80 lakhs. This is for the company. And how much amount is being taxed in the hands of CEO? Only 80 lakhs. So there is tax evasion on this 20 lakhs. To avoid this, what is given? That the proceeds of key man insurance policy will be taxed under the head income from business. So if the proceeds are received by the company, what will happen? If the policy's premium is 20 lakhs, so let's say the policy proceeds amount to 5 crores. This 5 crores will be taxed in the hands of company at 30.99% or along with surcharge at around 34% maximum. So this is a tax planning practice. This was a tax planning practice and section 28 has overruled this tax planning practice. Now it may happen that the proceeds are received by the key man directly. Director is receiving. Again in his hands also it will be taxed as business income. So write down in the space provided there. Employers get deduction of premium under key man insurance policy. Under key man insurance policy. Therefore, they started paying huge amount of such premium by diverting the salary amount. By diverting the salary amount. There was tax evasion in the hands of employees. There was tax evasion in the hands of employees. To avoid this, it has been provided that the maturity or surrender proceeds shall be taxable in the hands of recipient. Okay, now people are also smart. What they started doing, now this employer has taken out a policy of 25 years for this specific key man. So for 24 years they used to keep that policy as keyman insurance policy, and the deduction was available under section 37(1). And in the last year they used to convert this into individual policy. Now when it is an individual policy, will the proceeds be taxable? Proceeds won't be taxable. Proceeds of which policy will be taxable? Only keyman insurance policy. So again there was tax evasion in this case. So to counter attack that, what is given? Keyman insurance policy means a life insurance policy taken by a person on the life of another person who is or was the employee of first mentioned person, or is or was connected in any manner whatsoever with the business of first mentioned person, and includes such policy which has been assigned to a person at any time during the term of policy, which with or without any consideration. So now what is given, that even if you convert this into an individual policy, still the maturity proceed will be taxable in the hands of recipient. So write down. The employer started converting such keyman insurance policy into individual policy by assigning it to that person, Such person used to claim the exemption given under section 10(10)(d). See how it is written on the top, 10 into bracket 10(d). To avoid this, it has been provided that the proceeds will be taxable even if such policy has been assigned to the person. Okay. Now done with section 28, charging section. Now something very interesting. We have now the next few lines. What I have done, I have made some mix match, like some provisions from business income I have merged with some provisions from income from other sources, capital gains. Now tell me, which business incomes will be taxable under other source, under some other heads? Think, income of CA will be taxed under which head? Profession. So it will be taxed, so business income will be taxed under business income only. Then income from, if I am carrying out business of letting out of house properties, it will be taxed under income from house property. It won't be taxed. When it will be taxed under business income? Only if letting out of house property is supplement. It is not main business, it is supplementary business that we are going to do in house property chapter. Then income received by a share broker. What type of income the share broker will receive? Commission, brokerage. It will be taxed under what? Business income. If he is owning shares in his own capacity, then what income he will receive? Either capital gain or dividend. So that dividend will be taxed under which head? iOS. Again, whether trading of shares is business income or capital gains is a point of controversy. So again, you have to check up whether more features of business are there, so or it is more in nature of investment. So that will be discussed in the chapter of capital gains. So first, which is the income which is taxed under some other head? Renting out of house property. Even if it is my business, it will be taxed as income from house property. Then dividend from shares will be taxed as income from other sources, even if it is my business to trade in shares. Then winnings from lottery, straight away it will be taxed at 30%. So income from other sources. And interest received on compensation or enhanced compensation iOS. So again, we will be studying that. Now, after this, certain types of incomes have been given. You can just go through this. This is from your practice manual. This was asked in the recent exam, November 2014 exam. So you can go through this. Then section 29 is saying that income shall be calculated as per provisions contained in section 30 to 43D. Then paid means, okay, very, very important. Normally, when I say the verb pay or paid, what does that mean? Payment means I am actually paying. Now see what does section 43(2) say. Paid means actually paid, means actual payment in cash or by check, or incurred according to the method of accounting upon the basis of which profits or gains are computed under the head profits and gains of business and profession. So it also includes accrued, paid as well as incurred means on accrual basis. Now next, that's payment always allowable on cash basis. This is normally asked for 5 marks. These are interpretational questions. You won't get this answer from any of the section. You have to go to each and every section and you have to pick up. So these 6 sections, the deduction will be available on only cash basis. So we'll be studying each of these. You can just remember these 6 sections. Now we'll be starting with allowable deductions. Section 30 and 31. Rent, rates, taxes, repairs and insurance for building. Following deductions shall be allowed where the premises are occupied by the assessee as a tenant, the rent paid for such premises, and further if he is undertaken to bear the cost of repairs to the premises, such cost. Otherwise than as a tenant, the amount paid by him on account of current repairs. Any sums paid for land revenue, local taxes or municipal taxes. Premium for insurance against risk of damage or destruction of premises. So what are the 4 expenses which are allowed under section 30? Rent, rates, taxes and rent rate, repairs and insurance. 4. It is in relation to which type of asset? Building. So section 30 is for building and section 31 is for plant, machinery and furniture. So see what are the deductions under section 31. Amount paid for current repairs and premium paid for insurance against risk of damage or destruction thereof. Now tell me, if I take any plant and machinery on rent, will it be allowed under section 31? So it won't be allowed as deduction? Correct. So when specific section is not there for deduction, we can resort to this Karta Dharta section where you can fit in any expenditure. Section 37(1). So note, write down. Rent relating to plant and machinery. Rent relating to plant and machinery or furniture shall be allowed under section 37(1). Under section 37(1). What about taxes in relation to plant and machinery and furniture? What same? Taxes in relation to plant and machinery and furniture. What taxes we pay for maintaining plant and machinery? What any taxes? Name the taxes. If I am owning this computer, do I have to pay any tax? Every year. Every year I need not pay, but I'll pay at the time of purchase. Indirect taxes. So either those taxes are capitalized or I'll be getting credit of those taxes. Okay, so normally for plant and machinery and furniture, we don't pay taxes after the date of purchase. Like on building, we pay municipal taxes. Likewise, we don't have taxes for plant and machinery and furniture. And no deduction shall be allowed for capital expenditure. Now, whatever capital expenditure is incurred, it will be added to the cost. Yes. Now, next on page number 89, some conclusion from judicial pronouncements have been given. If firm has taken on rent premises belonging to one of its partners and pays rent to the partner landlord, rent would be deductible under section 30. So you cannot say that since it is payment made to partner, it will be covered under section 40B, that interest and remuneration wala section. This is not paid as in the capacity of a partner, but it is paid in the capacity of landlord. So it is allowed under section 30. Where part of business premises taken on rent is used and occupied by the assessee as his dwelling house, a proportionate rate attributable towards use of premises as a dwelling house is not allowed as deduction. Now, let's say I have started my business here, plus I have put one partition and I am staying in the backside. So, and I have taken this property on rent. Will I be eligible for the entire deduction? No. But when I am filing my return of income, should I myself reduce that proportionate component? I can claim full, but if there is scrutiny, then the AO will disallow some part. So, I need not do it myself. If I do it myself, it is okay. So, you will be awarded for being a very honest taxpayer. But normally, people won't do that. So, AO does that while doing his scrutiny. If an assessee takes premises on lease for carrying on business or profession and agrees to pay arrears of rent of previous tenant, such arrears of rent cannot be deducted. So, again, this is one case law. Where premises is taken on lease by the assessee for expansion of business, but the premises is not actually used and there is no evidence that lease agreement is bogus or premises has been used for other purposes, the rent paid is deductible. Very, very important. I have taken those premises on rent, but I could not carry out any activity there. Now, is the section saying that you should carry out the activity also? It is not saying. You have paid rent and it is being demarcated for business purpose, still you will be getting deduction. So, active usage is not required, even passive usage is allowed. Where however the assessee has taken a building on rent, but building is not even ready to put to use for the business of the assessee as it is under renovation, deduction of rent paid is not permissible under section 30. So you have to check whether that room is properly constructed. If yes, deduction of rent will be allowed even if it is not actually used. But it should be meant for business purpose. Correct. Section 32(1)(2) depreciation. Again, very important section. So today and tomorrow we are going to dedicate our majority of the time for depreciation. Depreciation, what do you know about depreciation in income tax? How to calculate depreciation in income tax? Correct. Okay. So WDV as on 31st April 2014, add additions during the year, less sale consideration. Whatever balancing figure you get, you will be charging depreciation, and then you get WDV as on 31st March 2015. What are the assets on which you will be getting depreciation? Okay. So basically there are two types of assets, tangible and intangible. Do we get depreciation on intangible assets? Depreciation on intangible assets. Yes, what is the rate of depreciation? 25% straight away. Patents, copyrights, trademarks, or any other right, business right. Then tangible assets, which are different types of tangible assets? Building. Okay, so we can say there are three types of tangible assets: building, plant and machinery, and furniture fixture. Now in building, what can be there? It can be there, there can be only factory building, office building, only in relation to the business. What about plant and machinery? What plant and machinery can be there? Correct. Machinery which is installed in the factory for production purpose. Then there can be cars. Then there can be tractors, lorries in the factory. Then there can be computers also. Computer is treated as plant and machinery. Then what else? And the third type is furniture fixture. Whatever benches you see, this table, this will be eligible under furniture fixture. So section 32(1)(2) talks about depreciation. In respect of tangible assets, building, plant and machinery, furniture, or intangible assets, know-how, patent, copyright, trademark, franchise, acquired on or after 1/4/1998, which are owned wholly or partly by the assessee and used for the purpose of business and profession. So two things are important for depreciation. Ownership and usage. Ownership, is it required that I should own it fully? Either wholly or partly, correct. Partly means co-ownership. So if I am a co-owner, then I will be getting only proportionate deduction. And usage, it should be used for the purpose of business or profession. Now if it is meant for, I have purchased one plant and machinery, I have got it in the factory, but I have not used at all because there was one strike going on. Can I get depreciation? Yes, I will be getting depreciation. Passive as well as active use. But I have got the machine, but I have not installed it. Then I won't be getting. Why? Because I should get it, purchase it, plus I should put it to use. So since it is not put to use, I won't be getting depreciation. I'll be getting depreciation when it is actually put to use. So write this on the top of your page. Done? Okay. Now usage. Okay, before that, I am just reading section 32(1)(2). Depreciation shall be allowed on WDV at prescribed rate. No depreciation to be allowed if actual cost is allowed as deduction in one or more years as deduction. Likewise, we have section 35, where we will be getting deduction of capital expenditure. So once you claim 100% deduction there, then no deduction available again in relation to depreciation. Explanation 5 to section 32(1). It is mandatory to claim depreciation. It is allowed whether or not the assessee has claimed it in computing total income. Normally, the section which are there in income tax are for the benefit of department. This section is for the benefit of assessee. You claim it or not, department is going to give you depreciation. So it is mandatory to claim depreciation, or if you don't claim, the department will give you. Usage, active as well as passive use. It is not necessary that these assets should be used throughout the previous year. Even if these assets were for only part of the year, the assessee can avail full allowance permissible under this section at not merely an amount proportionate to the period of user. Any forced idleness of the machinery cannot disentitle the assessee from getting the benefit of allowance. Like we have seen one case of strike. It is forced idleness, so it is not taxable. Even trial run of machinery would fall within the ambit of used for the purpose of business. Further, the assessee cannot be denied the benefit of depreciation on the ground that the machinery was used for a very short duration for trial run. Even if some of the assets in block of assets are used during the year, the entire block gets depreciation. Now, very important concept in income tax, that all the assets are not individually entitled to depreciation. You will be getting depreciation for the entire block. Let's see, this one and this one forms part of one block of asset. Both of them are being added in this year for purchases, as purchases. I am just using this machine, and this machine is not used, but it is kept ready for use. Can I get depreciation on the entire block or only on this entire block? Because once it enters the block, this one-to-one correlation is not present. If vehicle is used in contravention of rules provided by Transport Department, it would not affect claim of depreciation under Income Tax Act. So there will be some prosecution penalty under some other act, but that does not mean that you cannot avail deduction of depreciation on such vehicle. Once an asset is part of the block of assets and depreciation is granted on that block, it cannot be denied in its subsequent year on the ground that one of the asset is not used by the assessee in some of the years. User of asset has to apply upon block as a whole instead of an individual asset. So use of asset shall be applied as a block. So whatever example we have taken of this bottle and this remote control, so same will apply here, that even if I don't use the one of the assets, still I'll be getting deduction for the entire block of asset. Now certain case laws are prescribed for your exam. We have to study those case laws. Now if you see the format of case laws which are given in our books, the case is given. So before the case we have already discussed the legal provision. Now in the case, whatever background of the case is given, then what was the point of debate from the assessee's side is given, from the department's side is given, and the conclusion from either High Court or Supreme Court is given. Now ITAT or tribunal cases are not there for your exam. You have to just check up High Court and Supreme Court case laws, and all the case laws which are applicable for your exam will be given in this book. So first case law on depreciation, ICDS Limited. It was engaged in the business of leasing and hire purchase. It purchased vehicles directly from manufacturers and leased out these vehicles to the customers, after which the physical possession of vehicle was with the lessee. The lessees were registered as owners of the vehicle in the certificate of registration. Assessee lessor claimed depreciation on such vehicles. And what stand department took? AO disallowed the depreciation claim on the ground that assessee's use of these vehicles was only by way of leasing out the vehicles to others and not as actual user of vehicles in the business of running them on hire. Vehicles were registered in the name of lessee and not the assessee lessor. It had merely financed the purchase of these assets and was neither the owner nor the user of these assets. Now we'll check up this case. We'll discuss this case. Now, who was the assessee here? Assessee was in the business of leasing. What do you mean by leasing? Let's say I'm into the business of leasing cars. So I purchase the cars, I give them on rent, again they come back to me. Now for claim of depreciation, what are the two factors which are important? Ownership and usage. Now the vehicles were owned by which person? Payment was made by whom? By the assessee. But they were registered on name of the lessee. Okay. So that was the first stand of department, that you are not owner of that car. What about usage? What is given about usage? Okay, usage means what? It should be used for the purpose of business. What is the business of assessee? Leasing. Does that mean that for claim of depreciation, assessee should drive the vehicle? It is not required. So you have to check what is the object or what is the main business of the assessee. It is used. And again, just because registration is under some other person's name does not mean that he is not owner. The payment was made by the assessee himself or itself. ICDS Limited, so itself. Therefore, assessee lessor will be eligible for deduction of depreciation. See, this is a Supreme Court case law, so it is very important from exam point of view. In exam, you need not remember whether it is Supreme Court or High Court case law. Now, wherever there are High Court case laws in our books, I have given from which High Court this case law comes. So, it is just for your reference. You need not by heart the High Court names. On two factors, the Supreme Court has given its ruling. Usage for business. Section 32 requires that asset must be used in the course of business. It does not mandate actual usage by the assessee itself. In this case, it did use the vehicle in the course of its leasing business. Hence, this requirement of section 32 has been fulfilled, even if the assessee was not the actual user of the vehicles. So, ownership does not mean registration. Even beneficial ownership is allowed under section 32. So we'll discuss about that. The assessee is exclusive owner of vehicle at all points of time. The assessee is empowered to repossess the vehicle in case the lessee committed a default. At the end of the lease period, the lessee was obliged to return the vehicle to the assessee. The assessee had right of inspection of the vehicle at all times. Hence, the assessee lessor was entitled to depreciation. Now, after every case law, we'll be having one box. We have to analyze that case law, and whatever analysis is there, you have to write down in the amendment tracker and case law tracker, which is given on page number 2. So write down. Its business was leasing out cars. Since the vehicles were used for carrying out the business of leasing, the criteria of usage is satisfied. Criteria of usage is satisfied. Even though the vehicle was registered in the name of lessee, the lessor had full control over such vehicle. The lessor had full control over such vehicle. Therefore, lessor will be eligible for deduction. Lessor will be eligible for deduction as the asset is owned by it. The asset is owned by it, as well as it is used for the business. It is used for the business. Clear on this? Okay. Now next, assets acquired on hire purchased or installment scheme system. Now, what is the difference between leasing and hire purchase? Now, what is the intention of lease in this case? The vehicles were just leased, and after the lease term they came back to the lessor. In hire purchase, what is the intention? The intention is to sell them, but since the buyer does not or is not able to pay the seller, it is paid in installments. So since the intention is to sell, who will be eligible for depreciation? Hire purchaser or the hire buyer. Correct. Hire purchase. Payment on account of cost of asset is entitled to depreciation. Consideration for hire, time cost, that is interest, shall be allowed as deduction under section 37(1). And installment system. If ownership of asset is transferred to the assessee buyer, then the buyer is entitled to depreciation on the entire value of asset. So write down. Normally, so after the table you can write down. Normally, in case of lease, depreciation shall be allowed. Depreciation shall be allowed to lessor or lessee to lessor into bracket. Okay, this is a general conclusion which we are drawing. Now, if the intention of that lease is to transfer that asset, correct. Correct. So this conclusion, this conclusion is on basis of this case law. It will change accordingly as per the case. General conclusion hai. Then full stop. In case of hire purchase, the buyer will be entitled to depreciation. Okay, now I'll give you 5 minutes. You just go through different block of assets and we have to solve one problem on this. You have to tell me what will be the rate of depreciation. I hope you are reading. Done with the reading part or still reading? Do let me know once you have done. Done? Okay. Turn to page number 93. What is the rate of depreciation in following cases? Buses owned by K Travels who runs them for tours. Who runs them for tours. Now when is 30% depreciation available? When they are meant for giving on hire. Have you got it or not? Or still searching? Motor, see, plant and machinery, first point. Motor buses, motor lorries, motor taxis used in the business of running them on hire. So, what is the business of tours travels? It is not hiring. I get package from them and I go with them. Does that mean I have taken that vehicle on lease? That doesn't mean that I have taken on lease. So here it will be state normal 15%. So I done 15%. Now if the same travel company has given me that car on lease, then it will be 30%. See, what is the object or what do travel companies do? They arrange for tours. They are owning some buses. Now are those buses meant for giving them on hire? No. They are meant for their own business. So it is 15%. Now see point number B. What if buses are given on hire? Now here it will be 30%. 30%. Next, books purchased by professionals. 60%. Very good. Books purchased by businessmen. Why 100%? Check up that table. See, 9 number is professionals. 8 number is what? For running lending libraries. Now, our businessman is not running lending libraries. So, are books owned by businessman specified? Then, will the businessman be eligible for depreciation? Okay. Just check up the definition of plant. Plant includes ships, page number 91. Plant includes ships, vehicles, books, scientific apparatus. So definition of plant includes books. So what is the general rate for depreciation of plant? 15%. Whether getting it or not? General rule, general rate 15%. So write down. Books purchased by businessman 15%. Books purchased by library 100%. Printer and computer hardware 60%. Antivirus software 60%. Correct. So hardware, software, computer 60%. Now do you know this EPABX? You must have been to offices where there are different connections. So the office owns only one phone, but let's say if there are 8 cabins, every cabin has a number 213141 intercom. So the box, normally one box is there which has different lights. When you transfer from one line to different line, one light blinks. That box is called as EPABX. Can we call it computer? No, it cannot be said to be computer. It is a general plant and machinery, so rate is 15%. Mobile phones 15%, yes, correct. Normally what people do, if mobile phones of 5,000, 6,000, will complete for mobile. If mobile phones are given to employees for 5,000, 6,000, then they used to charge for charge to revenue under section 37(1). Normally when this 15% rate is applicable, when the value is higher. But ideally you should charge depreciation at 15% only on mobile phones. Okay. Next, temporary lift at construction site. I'll get back to your doubts after we complete this. Okay. Temporary lift at construction site. Which film has this temporary lift? Film Baby's Day Out, you must have seen. Those are the temporary lifts. Baby's Day Out or any of the construction sites you see those lifts. Those are eligible for 100% depreciation. Building owned by hotel 10%, correct. Business building. Building held by Kumar Builders. Building held for resale. Then it is stock in trade, therefore it is not a depreciable asset at all. So write down. If it is held for resale or sale. If it is held for sale or resale, then it is stock in trade. Therefore, it is not eligible. It is not eligible for depreciation. Pollution control equipments 100%. Very good. 100%. Equipment owned by doctors 15. General, it is general plant 15%. Excess consideration paid over and above the net worth when a unit is taken over. This is what? Let's say my value of business is 25 lakhs and the other party is paying me 30 lakhs. So 5 lakhs is goodwill and it is a depreciable asset. It is an intangible asset and it will be taxable at 20. It will be allowed as deduction at the rate of 25%. So write down. It means goodwill. It means goodwill. Depreciation equal to 25%. Depreciation equal to 25%. Next, right to carry on business. Intangible asset, again 25%. That amortization treatment is not there in income tax. There is no section which says amortization of any expense unless and until it is specifically given, like preliminary expenses it is given you should amortize for 5 years. Then section 35E it says that you have to amortize expenditure in relation to minerals and mines for 10 years. About goodwill it is not specified. See, you will be getting deduction at the rate of 25%. So effectively it will be amortized over 5-6 years, not equally. So first year 25%, then again it will go on reducing. Okay. Next, non-compete right acquired on payment of non-compete fee. Again this is a intangible asset, so 25%. Stock exchange member card, again as per one case law it is intangible asset, so again 25%. So let's take a break of 5 minutes and come back with new case laws and some calculation part.